Okay, let's continue our ASML deep dive series. This time we'll talk about governance and people. We're going to peel back the layers beyond the incredible technology and really analyze the company's core. Because from an analyst's point of view, this is where you find the true foundation of long-term value, the human and the structural capital that makes one of the world's most critical companies tick.
All right, before we really jump in, just a quick heads up. This is purely for informational purposes. It is not investment advice. So here's what we've got on tap today. We're going to break down ASML's governance structure, get to know the key leaders at the very top, dig into the incentives that drive them, and then wrap up by looking at who owns the company and how it's protected.
Okay, let's get right into the framework. You see, to truly understand who runs ASML and how the big decisions get made, you have to get your head around its structure. It's a classic Dutch two-tier system, and believe me, it operates very differently from the single-board model you might be used to in the US or the UK. That difference is absolutely fundamental to their whole strategy.
So what this system does is create a formal separation of powers. Think of it as a built-in architectural check and balance. For a company like ASML, a company that makes these multi-decade bets on technology that cost billions to develop, this structure is crucial. It ensures the immense pressure of day-to-day management doesn't mess with the long-term strategic vision. It's a design that's all about fostering stability and patience. And here's where you can really see that division of labor in action. The supervisory board, they're like a strategic council. Their eyes are glued to that long-term horizon, protecting the interests of everyone involved, not just shareholders. The board of management, on the other hand, is the executive team on the ground, the ones handling the day-to-day execution, hitting targets, and managing the mind-boggling complexity of the business. The whole structure is built to balance prudence with performance.
And when you dig a little deeper, you see just how serious they are about this oversight. It's not just one big group. It's a collection of specialized committees bringing focused expertise where it counts. Now sure, audit and remuneration committees are standard, but a dedicated technology committee at the supervisory level? That right there, that's a huge signal for any analyst. It tells you that technological leadership isn't just an operational goal, it's a core governance priority that's being watched at the highest level.
So who's actually leading this structure? Well, let's start at the very top of the supervisory board with the chairman, Niels Andersen.
From an analyst's point of view, this is the first big question you have to ask. I mean, on the surface, putting a guy from logistics and consumer goods at the head of a deep tech company like this seems, well, a bit weird. But as you'll see, the logic here is actually deliberate and strategically brilliant.
Yeah, if you look at his resume, you're not going to find semiconductors. What you will find is experience navigating the treacherous waters of global trade, managing absolutely massive, long-cycle capital investments at Maersk, and leading through some pretty intense economic cycles. These are industries defined by huge upfront costs, cyclical demand, and complex geopolitical risks. Sound familiar?
And that's exactly why they chose him. His value isn't a deep understanding of lithography, it's strategic wisdom. Wisdom forged in the fires of other capital-intensive, super-cyclical industries. He's not there to second-guess the engineers on the physics of EUV light. He's there to provide that seasoned oversight on multi-billion-dollar capital decisions and to challenge the executive team on global risks.
I mean, look at his track record. It's all about navigating upheaval. At Carlsberg, he pulled off a complete strategic overhaul. Even more telling, at Maersk, he steered one of the world's largest shipping companies right through the absolute storm of the 2008 financial crisis. That kind of experience, making tough calls when global trade just stops, is directly transferable to ASML, giving them a steady hand to guide them through the industry's famous boom and bust cycles.
Okay, so that's the long-term strategic view. Now, let's switch gears and look at the executive side with the CEO, Christophe Fouquet, who is the perfect complement to Andersen's outside perspective.
Fouquet is the ultimate insider. This is a guy who's risen through the ranks. He was the chief business officer, and he has this intimate, hard-won understanding of ASML's tech, its key customers like TSMC and Samsung, and its unique culture. The transition was so smooth, they called it a Formula One pit stop, and that's a clear signal of stability to the market and its customers.
You know, his focus is internal, on driving that culture forward. And this quote is really telling. It's not about changing what makes ASML successful. It's about enriching it. In a company that solves problems literally no one else can, bringing in diverse perspectives isn't just a nice-to-have, it's a direct input for fueling innovation. So what you end up with is this really powerful, balanced dynamic at the top. You've got Andersen providing the external perspective, the seasoned oversight, and then you have Fouquet driving the internal engine. the execution, the deep customer relationships, and the tech roadmap. It's a partnership designed to cover all the bases.
So, you have the right people in the right seats. But how do you make sure they're all pulling in the same direction? The direction shareholders want? Well, let's look at the incentives. Because from an analyst's perspective, a compensation structure tells you what a company truly values.
Okay, let's start with their short-term bonus. It is heavily weighted toward profitability. EBIT margin makes up 60%, so a clear focus on the bottom line. But it's not just about the numbers. The other 40% is split between customer satisfaction and technology leadership. This makes sure that short-term profits don't come at the expense of their long-term competitive moat, which is built on those two exact things: happy customers and a huge tech lead.
Now, looking at the long-term incentives, this is where it gets really interesting for me. The financial metric shifts to return on average invested capital, which is a tough measure of how well they're using their massive capital base. But look at this, a 40% weighting on ESG goals, putting it on par with financial performance. That is not just lip service, folks. That is a powerful signal from the board that sustainability and diversity are core, non-negotiable parts of creating long-term value.
And to top it all off, they make sure there's real skin in the game. The CEO, for instance, has to hold shares worth 3 times his base salary. It's not just a job where you collect a paycheck. Their personal wealth is directly and meaningfully tied to the company's success. And for other shareholders, that's a powerful vote of confidence.
Finally, let's talk about who actually owns the company and how the structure both empowers them and protects ASML's long-term vision. Now, ASML has these clear, formal ways for shareholders to make their voices heard. And this is crucial because the company is largely owned by huge institutional investors. Think firms like Capital Group and BlackRock. This means that direct engagement through these channels isn't just a formality. It's a critical part of staying aligned with the capital markets that fund its massive R&D budget.
And here's a really critical piece of the puzzle, especially for long-term investors. The company has this strong and very Dutch defense mechanism. It's an independent foundation, a stichting, that can step in to fend off hostile takeovers. This structure is designed explicitly to protect ASML from short-term activist pressure, allowing management to keep its focus on that long-term R&D without distraction.
So when you step back and look at the whole picture, the two-tier governance, the insider-outsider leadership duo, the balanced incentives, and the protective ownership, you see this powerful framework. It's a machine built for resilience in a tough industry. And it leaves us with a critical question. Is ASML's ultimate competitive advantage not its UEV machines, but the very human and governance structure that enables their creation? And that's for today's video. Let us know in the comments if you'd like us to focus on something else or continue our S&P Global's deep dive. See you soon!